Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, hope you're having a good weekend. Checking in on the markets, we're going to look at the usual suspects here. So we broke the 5-day in a row lower high pattern that shifted momentum enough for us to say, all right, our daily higher low has been established now on SPY. So we have the low of the October dump, high of the bounce, higher low is 267.01, and we are anticipating the most likely scenario is a lower high compared to the 281 resistance zone that we have here, and a tightening range into next week. News events can change that. We've certainly seen the impact of news events and tweets on the markets this week. And really what it is just bots reacting to keywords instantly. And you can see it on the 5-minute time frame. We had this pattern this week on SPY where we would have a bullish start to the morning and then just this long, slow fade where we ended up getting under 4 and 8 period exponential resistances on the 5-minute time frame for SPY. These are the 12 and 26 period right now. But if they're the 4 and the 8, and today's not just the only example. There were plenty of examples where we just grinded down and slow faded the whole rest of the day, giving that move back. So for me personally, this market right now, the momentum has shifted as far as the charts go, but it's not showing a lot of strength to me because I don't believe we would be here without these tweets coming out. And I do believe that these tweets and this news comes out intentionally to prop the market up a little bit. So regardless of the China and the U.S. news, which is absolutely the short-term catalyst that we're watching, and if it does go through, we will see a bullish reaction, keeping in mind that every time we get these little news releases and SPY does this 20-minute bull move, erasing multiple hours of just a slow fade, getting that all back, that's pricing in this trade deal to a certain degree. Now, not fully cert, of course, at this point, but to a certain degree. So keep that in mind as well. So any of these patterns that we're looking at, the most significant bullish news would be a trade deal with China, and that could change things significantly and have us looking right back up at that 281 resistance. So it is worth watching, but again, you need to be aware that these moves come out of nowhere as these algos and these bots respond to these keywords, and that 20-minute move can hurt shorts very quickly. So I'm going to be patiently watching. Again, I exited my hedge a little bit early. Pretty much right now where we are at is where I exited, so could get back in if I wanted to, but I'm probably going to either top fish the 281 zone of resistance on a re-entry or just wait for the tightening range to give us a clear break. So that's my game plan going forward on SPY as we head into this coming week. Weekly time frame for SPY, we have our low, high of the dump, and this is the bulls attempting that higher low as we have the range tightening. So tightening ranges are good in terms of day trading within them. Opportunity might be limited a little bit, but always gives us some nice clarity when those tightening ranges do break. IWM also got that follow through with a solid close. Significant little uptick in volume. Bulls are definitely enjoying that. So the low, high, higher low is down at 148.13, and we're going to look for a lower high compared to 157.90. Again, we can absolutely just see a bull move through that level with the right kind of news catalyst, but without that news catalyst, in my opinion, the most likely scenario is that lower high and tightening range next week. Weekly time frame for IWM, 100-week moving average support, and the same setup with that higher low attempt, and then we'll watch for the break of the lower highs if the bulls are going to recover from this significant pullback. And I've had this conversation with multiple people in person now where I talk about the overall market, and pretty much I can say that within 1 month, we're going to get a ton of information as to whether this fear is going to come back full swing or whether the bulls are going to recover enough that that fear subsides to a significant degree. QQQ did not get the follow through. This is absolutely worth noting. The bulls could not break the lower high pattern. At this point, we now have a lower high 6 days in a row. Resistance is 168.31, 168.54, 70. There's a lot of resistances in the 168s. The bulls are hoping the daily higher low is 163.46, but the tech sector is not following through in any significant way to give this market confidence. So I've been watching for 2 years now and getting accustomed to how important the tech sector is to the market strength and the bull run that we saw. So if the tech sector is not participating, again, it makes me a little bit more skeptical of the bulls at this point, and knowing that without those 20-minute bull reaction to tweet headlines, that the market would be in a bit shakier position here heading into this coming week. Weekly time frame, long lower wick, same scenario as everybody else. Financial sector did get some follow through, so we got that bull break and the higher low is 2603. You can see how clearly everything is correlated here. Every sector, every market is looking for the daily higher low. The differences are where we are positioned. So XLF pulled back with a healthy higher low, didn't get close to that low. And if we look at QQQ, it got much closer to that support on that pullback. So that's a distinct difference where it's the same pattern. The details are just a little different. So we're looking for a lower high compared to 2752 and a tightening range on the financial sector as well. Weekly higher low, long lower wick, and tightening range. VIX on the daily chart pulling back and closing at the low of the day significantly. This is a potential entry opportunity approaching this coming week. I'm going to be watching VIX and TVIX for the potential of a higher low compared to 1609. That will be our bottom fishing level. So if we start with some weakness on Monday, Tuesday, and we get closer to that level, that is a potential entry point to be looking for a daily higher low to form and a tightening range on VIX. And that would likely be a good entry if indeed SPY and these markets are going to give us this lower high. So that's what we're watching for to play within this equilibrium and the big upper wick on the weekly time frame for VIX. So that's where we stand. Again, always got to be watching these tweets. And at this point, it got to the point on Friday where I saw this action and I didn't have the news headline right away. And I could say, check SPY for news, likely Trump in China. And that's pretty much what the market has done now 2 or 3 times at this point in the past week or so. And that is what we're going to continue watching out for as we go forward towards the G20 summit and see if anything actually does come out of any kind of talks. So appreciate you watching. Have a good weekend, and we'll see you soon.